Hello everyone, welcome to today's session. So today we are going to continue our chapter number 17. Okay, we are going to discuss further topics in the chapter number 17. Now before we proceed, anyone has any doubt in any of the part of the chapter number 17? Anyone? Okay, if no doubts, then let's proceed. Okay, with our chapter number 17. So today what we are going to do? Today we are going to take up a particular topic known as a type of investigations, and over there we are going to understand that there are two type of investigations. Okay, one is a statutory investigation. Statutory investigation which is done under the Companies Act. That means as per the provisions of Companies Act, when ROC, SFIO or the central government wants an investigation into the affairs of the company or into the ownership of the company, they may order the inspector or the relevant person to carry out an investigation. We will see. I will discuss each of the section. Okay, and then there are the non-statutory investigations. Non-statutory investigation is, for example, investigation done on behalf of the incoming partner. Let's say a partner wants to join a partnership firm, but before joining, he wants that, okay, whether is there any hidden liability in the company? Is there any fraud in the company or in the partnership firm? Investigation for the valuation of the shares. Valuation of the shares at times are directly related to the net worth of the company. So it could be said that investigation to identify whether net worth is correct or not. Investigation on behalf of a bank, okay, for providing a loan if the bank has doubts with respect to the affairs of the company. Investigation with respect to the frauds. So there are various type of non-statutory investigations. Now, when I talk about various type of non-statutory investigations, that means they are not carried out under the provision of law. Rather, these investigations are opted by third party or the parties which are under a particular contract. Okay. So in those cases, these investigations are carried out and they appoint an investigator to investigate the matter. But when it comes to the Companies Act, we call it a statutory investigation. Now, it's not only the Companies Act. See, here we are discussing about the Companies Act, but in the real life, if you see, there are multiple laws under which an investigation into the affairs of the company can be done. One such is SEBI Act. SEBI can also also order an investigation. Okay, there are provisions under SEBI regulations also. So it's not only sections or the things which are there for the investigation. There are others under banking regulation, under RBI regulations, under insurance, NBFC. A lot of things are there over. Okay, for the regulated entity. So as of now, we will not go into any other law for time being. Okay, we will only discuss the company sections and non-statutory. Okay. Now, when I talk about statutory, there are two types of statutory investigations. One, which is the investigation into the affairs of the company. When I say affairs of the company, that means who is managing what is, the company is being managed, how the company is being managed. So when I talk about into the affairs of the company, that is into the transactions, into the business, that is operations that is being done by the company. Okay. And for that, the primary sections are section 210, 212 and 213. Okay. 210, 212 and 213. These are the three important sections under which an investigation can be ordered. Okay. Now, what is 210? Like, what is the difference between 210, 212, or then you can say 213? Okay, let me tell you. See, when I talk about 210, that is investigation into the affairs of the company. 210 is a primary section, which is the investigation into the affairs of the company, where investigation is done by inspector on the order of central government. So here, based on the order which is provided by the central government, okay, investigation is carried out. Now here the inspector has various powers. Okay, the inspector who carries out the investigation has various powers to carry out the investigation. We will see those powers, and that is covered again, under different section. But yeah, so that is the one part where sorry, that is the one part where investigation can happen. Second is investigation by SFIO. That is done under section 212. If SFIO, that's a Serious Fraud Investigation Office, thinks there are matters or there are any issue, then they may order an investigation under section 212 of the Companies Act. And again, the inspector will be there and he will perform the investigation. Okay. Third, other cases. Other cases, basically, you can say where based on the reports or orders issued by either central government or ROC, or there are cases given under 213, based on which, if there is anything, then investigation can be carried out. Okay, so these are the three main sections. Now, when I talk about 210, investigation into the affairs of the company by an order of central government. Now, central government can pass this order if they have received a report from registrar and there is a special resolution passed by the company which requires an investigation, or in public interest. So there are three grounds basically. One, if there is a report from registrar. Second, if there is a special resolution passed by a company. And the third, public interest. On these three grounds, the central government can order an investigation into the affairs of the company. Or if there is an order passed by the tribunal, okay, if there is an order any passed by the tribunals, on the basis of that order also, the central government can, ask the inspector to perform the investigation into the affairs of the company. And for that, central government may appoint any person. Okay. Now, when this investigation happens, okay, so there are some powers, procedures which are required to be followed. So basically, if you see, there is a section of Companies Act. Section 217 of the Companies Act provides the procedures, powers of the inspector. Now, inspector is the one who is being, appointed to carry out the investigation into the affairs. Okay. There is section 219 again, which also talks about the power of inspector to conduct the investigation under 210, 212, 213. Okay. So these are the two sections where they have the power. Inspector has the power to perform the investigations if and there is an order under these sections. Okay. Now, this particular section, when I talk about 219, gives the power of investigation to the inspector, not only for the company for which such order has been passed, but it may also include subsidiary companies, holding companies, or subsidiary of those holding companies. So means you can say related parties. So related parties can be in-scoped for the purpose of investigation. Managing director, manager, or key managerial personnel can also be investigated. Okay. Relevant directors can also be investigated who were there at that point in time. Or any other person, employee can also be investigated. Okay. And they are required to provide those details, which details the inspector asks. Now, there are multiple powers which is provided to the inspector. For example, that he may ask the books of accounts, he may ask the information. The company is required to provide any information. Inspector may examine on oath a particular person. A lot of powers are provided, powers which are already there under the Civil Code of Civil Procedures. Okay, for the discovery and production of the books, for summoning the attendance, for inspecting any books. All those things are already there under Section 217. Okay, under Section 217, all these powers are already being provided to the inspector. That means inspector can carry out a detailed investigation if he wants. Okay, now coming to the second one is investigation by SFIO. Now, SFIO, again, if there is an order, okay, if there is an receipt of an order from the registrar, or you can say report from the registrar, or if there is a special resolution passed, or in the public interest, or on the request of the government, if any of the item is present, then SFIO may be assigned for carrying out an investigation. Okay, so here the investigation will be assigned to the SFIO, the Serious Fraud Investigation Officer, and its director, and they then may appoint the relevant inspector to carry out the investigation. Okay, but the grounds are same, that if there is a report from the registrar, special resolution, public interest, or the order, it is the same. Okay, then there is other cases. Again, other cases is where if there is an application made, okay, so here the order is passed by the tribunal, but on the basis of the application that is made to the tribunal, okay, where either 100 members, okay, or 1/10, 100 or 1/10 members, okay, they request for the investigation into the affairs of the company. Now, if there is an, let's say for example, less than 100 members, less than 1/10 member, still investigation can be carried out if there are three specific grounds. For example, to defraud the creditors. Okay. Second, there is a fraud happening within the company. Okay. And there is a reasonable expectancy that that the amount which is paid, okay, that the amount which is paid to the managing director, manager of the company, okay, is not appropriate. So if these are the three grounds, then on the basis of that, an investigation can also be carried out into the affairs of the company. So these are the three specific cases or scenarios where investigation can be carried out. 210, 212 and 213 plus 217 and 19 are the sections where the powers of the inspector are there. Okay. Now that is into the affairs, that means the transaction. But when I talk about 216, section 216, it talks about the ownership. Who are the real owners of the company, beneficial owners of the company? So here, if central government wants to determine who have been financially interested in the success or the failure of the company, or who control the company materially, okay, or who has the beneficial interest in the company, then an investigation can be carried out under section 216. Again, they will appoint the investigator to investigate the ownership of the company. Clear? Any doubt? Any doubt? No? Okay. Let us see one simple question again to revise this particular part and to understand in much more detail. Okay. So we have one good case study type of question. Basically, it's a scenario. Very good one. Let's read it.
Apex Textiles Limited, a major player in the garment industry, has recently come under the scanner of regulatory authorities.
I think there is some voice issue. Just give me a minute.
Case study. Apex Textiles Limited, a major player in the garment industry, has recently come under the scanner of regulatory authorities. Due to persistent complaints from shareholders regarding mismanagement and alleged fraudulent practices, the central government has ordered an inspector to examine the company's affairs. Given the severity and complexity of the financial irregularities involving public interest, the government has also referred a specific aspect of the fraud to the Serious Fraud Investigation Office, SFIO. Additionally, there are suspicions that a significant portion of the company's shares is held by shell entities to conceal the identity of the true owners. Consequently, the government has ordered a separate probe to determine the true ownership and control of the company. Required. You are a consultant specializing in corporate investigations. Classify these proceedings under the broad head of types of investigation as per the study material. Specifically, identify whether these are statutory or non-statutory, and pinpoint the specific sections of the Companies Act, 2013 applicable to each scenario mentioned above.
Okay. Basically, straightforward. So these are the three scenarios where investigation is done. You just need to tell me which type of investigation it is and which section will be applicable. That's it. Straightforward. Okay. The first one is that due to persistent complaints from the shareholders regarding mismanagement and alleged fraudulent practice, the central government has ordered an inspector to examine the company's affair. Second, given the severity and the complexity of the financial irregularities, SFIO has been involved. And the third one is on the ownership. Straightforward. Now tell me which investigation is which and under which section.
Sir, the first one is section 210. SFIO section 212. And the third one is the management affairs, which talks about 216.
Okay. So the first two are the investigation into the affairs, or they are also for the ownership? The first one, okay. So the first one is investigation into the affairs of the company, as it is written, which is under section 210 of the Companies Act. Then there is investigation by SFIO, but this is also for the financial irregularities. Again, this is on the company's affair. Affairs of the company. Okay, which is under 212. Then comes the ownership. This is under section 216. Just now we discussed. So these are the three different type of investigations which are being ordered over here. Straightforward, simple, no complexity. Clear?
Yes, sir.
Okay. Now, were the three statutory investigations that we discussed. Now let's talk about the non-statutory investigation. Okay. In the previous session, we discussed about some few points about the investigation, how investigation is done, and what are the few things about the investigation. Remember, in the last session, we discussed about the 5 steps. How do you perform the investigation? That is, first, you plan, like what is the objective and the scope. Then you formulate the program. Then you examine the records, analyze or interpret the findings, and then you report. Remember OPR system that we discussed in the last session for the investigation. This is how you do the investigation. Same like audit, that you plan, program. First you create a program, then you examine, perform the testing, then you evaluate the results, and then do you report. But here the important part is objective and scope. Reason because in stat audit, you know what is required to be audited, how it is required to be audited. But in case of investigation, subject matter can differ from assignment to assignment. So that's why it becomes necessary first to understand what is the objective and the scope of the investigation. Okay. Now, when I talk about various different type of investigations, now we will go into the various non-statutory investigation. We'll understand those investigations. Let's say we have an investigation on behalf of incoming partner. Okay. Investigation is done on behalf of incoming partner. Now, investigation cannot be a very wide thing. Okay, investigate everything. No, it cannot be the scenario. Okay. However, investigation will be dependent on a specific area. Investigation can be dependent on the specific area. For example, trade receivables, for example, what you can say, trade payables, or any of the area. Okay. But it will be on a specific area or specific subject matter. Okay. And based on the person who is appointing, based on the subject matter, the actual investigation is carried out. So what we will do is, we will take one question. Okay. We will take one question that how investigation is done on the trade receivables. We will take one question, case scenario based, and then based on that, we will understand the trade receivable areas. How do you carry out the investigation into the trade receivable areas? Okay, just let me share the question.
Orion Textiles Limited, a manufacturer of high-end fabrics, has applied for a substantial working capital loan from Citibank Limited. The company's financial statements show a significant increase in trade receivables over the last 2 years, despite a stagnation in turnover. The credit manager at Citibank is concerned that the company might be inflating sales or carrying unrecoverable debts to present a better financial position. The bank appoints CA Z to conduct an investigation into the financial affairs of Orion Textiles Limited, with a specific mandate to verify the quality and recoverability of the trade receivables required. As CA said, elucidate the specific areas of analysis and verification procedures you would undertake regarding trade receivables to determine their true value and assess the company's trading health.
Okay. Now, in this particular scenario, there is a company, okay, manufacturer, Orion Textile Limited. They want to obtain substantial working capital loan from a particular bank. Okay. There is an increase in trade receivables, but there is a stagnation in the turnover. There is not something, something is not fitting in the equation or in the box in this particular scenario. That's why the bank appointed CAZ to investigate into the financial affairs of Orion Textile and see the quality and the recoverability of the trade receivables. Now you tell me how, if let's say for example, if banks appoints you on behalf of CAZ to perform the investigation, how you will do the investigation, what you will do in the investigation. Take a minute, read the question and then answer. Okay, tell me how you will carry out the investigation over here. What things you will check? Third party confirmation. Okay, very good. Existence, third party confirmation. Yes.
So, external confirmation from all the customers from last 3 years, because they are talking about 2 years, but we can see the last 3 years also, whether from when the trend has increased.
Okay.
To us, and also we can see GSTR1 also we can check it out whether all the sales are reported in the particular period. The same has been whether it's a cash sales or a credit sales, whether that is reported appropriately or is there any overstatement.
Yes.
And also
Absolutely.
We can see what is the aging of the debtors. How the aging is calculated and whether there is a receipt is properly recorded, and also we have to look into the bank statement as well.
Yes, very good. Very good. Yes. What else? Apart from this, anything else? What else you will look into when you are doing the investigation?
And also we have to see what is a credit term given to the customers. And the delivery note, acknowledgement from the customers.
Can you tell me why credit period from the customer?
Credit period is very important because whether they are in collecting the credit period as per the credit period, as per the credit limit also, the customer also they will fix the credit limit. If they are selling the goods over and above the credit limit, that is also there is a problem.
Absolutely correct. Now, when I talk about investigation, there is a one small misconception that whenever the term investigation someone hears, the first thing they correlate is a fraud. Okay. So when we talk about investigation of the trade receivable, they will start writing about the fraud investigation into the trade receivables. But however, it is not the case. Here we are talking about the quality and the recoverability of the trade receivables. There may not be a fraud. Okay. That means the answer over this particular question will also look into the quality of the trade receivables. When I talk about the quality, I will do the I will check the aging of the receivables. I will check the provision that is created on the receivables. Why aging? Reason because it may happen that since last 2 years I am not collecting any amount. I am doing the sales, but I am not able to collect the amounts. That's why over the last 2 years, despite a stagnation in the turnover, there has been an increase in the trade receivables. It may happen. Let's for example, if there is a sales, but you are not able to collect the amount, trade receivables is going to increase. Trade receivable will definitely increase despite stagnation in the turnover. So aging analysis is one important analysis. If such a scenario is there, then you need a provision. That's why you will do the provision analysis. Recoverability. Recoverability, there are two ways to understand recoverability. One, I may go for subsequent collection, subsequent receipt. I may check that. Okay, what is the subsequent receipt? Let's for example, I am checking trade receivables as of 31st March. Investigation is happening in the month of May. So I will go and check how much of the amount I have received till the end of the May for the month of March. External confirmations. Okay. External confirmation will give me, you can say, evidence about the recoverability. Yes, they are genuine. They can be recovered. Then there is a credit period. Why credit period is coming into the picture? Reason because number one, do we have an unreasonable credit period? The credit period which is not required to be given. For example, we generally the credit period in the industry goes for 30 days, but we are giving credit period of 1 year. Doesn't make sense. If we are giving a credit period of 1 year, that means they are not yet due. The person will not pay. He has whole 1 year to pay you the amount. Then credit limit. What is a credit limit given to that particular customer? So credit limit, credit period, all those things I will evaluate in order to comment on the quality and the recoverability of the trade receivables. I may also check for a related party transaction in this scenario. If a particular transaction, if a particular trade receivable is a related party, my risk and the quality and the recoverability will differ in case of a related party. Over there, the question will come of the arm's length price. Okay, so that will really help me to assess the true value and trading health of the trade receivable that the company holds. This is how you should answer the particular question. Clear?
Sir, and also we have to see what is a closing finished goods, finished stock at that year end, because since it involved more than 2 years, we have to see what is a opening closing stock, whether the sales is commensurate with the purchases as well. If the purchases is not there with respect to that sale, which means they are highlighting, increasing the sales alone, without purchasing the raw material and without manufacturing it.
Yes. Basically, in those scenarios, we do investigation into the sales, and I will come on the types of the fraud. Okay. Over there, we will discuss this type of fraud with respect to, the sales and everything. But usually when we have to see that particularly, how the sale is being made, whether it's a genuine sale or not, or it's a sham one, generally that is done when we are doing the investigation for the sales or the fraud in sales. Revenue recognition, basically.
Yes, sir. Why I am telling this, the receivables is directly linked to sales. Whenever the sales is put, yes. How the stock will get reduced. Without any closing stock, how they can sell the sales?
Correct. Yes, absolutely correct. Yeah. Any else? Any other point to add or any other doubt? No? Okay. So it was the trade receivable that we discussed. Again, if you see, the same is given, answer is on page 17.29 of the study material. Okay, the answer for this question, you can take it from 17.29 of the study material, that is here, trade receivables. So in assessing their value, you can go for the provision. What is a provision? Okay, whether they are required to be written off or not, or appropriately adjusted for the provisions or not. Credit period, as we discussed, excessive discounts have been given or not. Okay, then you can see their aging analysis, as I said. Okay, whether they are appropriately within their age bucket or not. You can see to data to sales ratio, to understand about how the sales is done, how quickly the data are converted and into cash, and then sales into data, and all those things. Okay, so this is how you can do investigation into the trade receivables. Let us take one more question on the similar lines. Okay, wait a minute. It is also a very good one. Yeah. Let us take this question also.
Prosper Holdings Limited is an investment company with a diverse portfolio of assets. Recently, the company has faced liquidity issues despite showing healthy profits in its books. The board of directors suspects that the portfolio management team might be overstating the value of long-term holdings or misclassifying investments to present a better financial picture.
Just
To address these concerns, the board appoints CAI to investigate the company's investment portfolio. The board specifically wants to know if the investments are valued correctly, if income is being recognized appropriately, and if there are any encumbrances not disclosed. Required. As CAI, outline the specific principles and procedures you would follow for the investigation of investments, covering their classification, valuation, and income recognition as per the relevant study material.
Basically, here what you need to do is you need to tell me how you will investigate into the classification, valuation, and income recognition for the investment. Okay, so you need to talk about the basically performing the investigation on the investment of the company. Take a minute, read the question again, and then practice. Okay, so how will you perform the investigation?
Sir, investigation covering the two classifications, that the long-term investment and the current and non-current investment. That too, investment is part of the financial asset. Whether it is correctly classified under the category of financial asset, under the current and non-current, whether the short-term is classified under the long-term, or long-term is classified under the short-term, that we need to address, check it properly based on that intention of the investment. And also we need to check that valuation specifically for the long term. In nature, generally they should record in the cost only. Okay, it will be carried at cost. If the long term investment carrying cost which is lower than the realizable value is very lower, then it has to be recorded the net realizable value only. In that case, whether that proper provisioning is made, if it is more than 90 days, as we have to do that provisioning as well, whether it is done properly. And also that whenever there is a investment, there will be the dividend received, the dividend will be there, and the interest income will be there, whether they are properly recognized or not, and whether it is properly adjusted as appropriately. This aspect need to be checked out.
Very good. Yes. So when I talk about investigating on the investment, now here, if in this particular question, if you see, what we are required to see is a classification, valuation, and income recognition. Three things. So when I talk about classification, okay, so classification, as correctly said, it's on the classification between the short-term, long-term, sorry, the purpose of holding of that particular investment. Now, I can say that, okay, You need to understand whether this investment are short term or long term. But the question comes is how you will identify whether it's a short term or long term investment. What you will do to identify whether it's a short term or long term investment? Anyone?
Say example,
Basically,
if it is a fixed deposit, they can verify the fixed deposit amount, the FDR receipt, they can verify it. If it is deposited for 4 years, then they classify it in the short term, which means they wrongly classified it into short term instead of the long term. Likewise, the agreement term that they have to refer the original receipt of the investment. They have to cross check the based on the agreement. In some cases, if the investment made to the subsidiary company, what is the terms of agreement? If the any collateral is given, guarantee is given, what is the purpose? It has to be verified based on the amount. If the say example, if it is they mentioned as a long term, whether they record in the short term as well, the vice versa. Based on the original receipt, the deposit receipt, they have to check based on the contract agreement.
yes, absolutely correct. So when I talk about classification between short term and long term, that will be based on the type of investment. If it is fixed deposit or investment with a bank, you can have the documents, you can see if there is a lock-in period or not. But the problem arises where you don't have such kind of lock-in periods. Okay. For example, you have an investment in shares of a particular company. So a company has an investment in shares of another company. Now the question comes is whether it is short term or it's long term. You may ask from the management. Management tell me whether this is short term or this is long term. But at times, apart from having the management's assertion that okay, management will tell you that it is for the long term, you usually do not identify any other appropriate documentation. For example, company has invested into the shares of another company or made an investment. Now, as per the management said we plan to hold this investment as on a long-term basis. So you will take it that okay. And later on, it may happen that they sell immediately. And at that point in time, it becomes very difficult to understand that when we did the classification on a long-term basis, now suddenly it is being sold, means the classification was wrong. So you have to be very careful when you are classifying only on the basis of the management's assertion. Okay, if management says it's a long term and we agree on that and proceed ahead, that's very difficult and that's very a problematic scenario. So there are other information and evidences always available that we should resort to understand the classification. For example, when it comes to the investment in shares of the company, okay. Now, you tell me one thing, any other document apart from the management's assertion, how you will identify whether it's a long term or short term investment into the shares of another company. Forget about the management. Like you asked management said it's for the long term purpose. Now tell me, apart from this particular conversation with the management, how you will validate whether management is correct or not? Shareholding certificate. What if the investment is done in the current year itself? Management says, no, we have made the investment in the current year in this particular company, but it's for the long term.
Sorry,
How
external
you will
confirmation. We can get the external confirmation.
But external confirmation, how can you get the external confirmation for something which is internal? The classification and intent to hold is of management. How an external party can provide you that intent that whether it's a long term or short term?
Sir, we can see the statement, bank statement, we can see on what date the company has made the investment. The date of
Let's say it is
payment
done
will
in the
be there,
current year.
right?
For example, it is done in the current year. It was not there last year.
The certificate only, that certificate of receipt.
I'll tell you. See, behind every investment, company cannot make an investment overnight. Okay, they cannot say that, okay, let's do an investment and they will make an investment. It's a company. They need to get it approved. There might be a board meeting behind it, board resolution behind it, why the investment was carried out. Okay. There might be some documentation of the board resolution or something behind it. Number two, the funds which are utilized for this particular investment. So what happens is, let's say, for example, the company was having some funds for the short-term purpose. Some funds for the short-term purpose. Let's say, for example, company receives some funds, let's say, from a particular contract as an advance, which was lying with the company. That company wanted to utilize for the working capital, but not immediately. Now, from that funds, company invested into the shares of another company. So you can see that, okay, there was a working capital funds which are used for the investment. So there could be a chances that it is a short term, not a long term, because this is a working capital money which is required to be, injected back into the working capital. Number two, the documentations, the board resolution I'm talking about. Number three, budgets. How company is going to meet the cash requirement. Is there some provision of selling those investments to meet the cash requirement? So the cash flow analysis can also tell you, the budgeted cash flow analysis for the next 1 year, 2 year can also tell you that whether company plans to hold this investment for a long term or not. So there are ways where you can identify whether it's a long-term investment, whether it's a short-term investment. And on the basis of that, the valuation will follow. How will you value for the short-term? Or current investment? How will you value for the current investments? Anyone?
So it will be lower of cost or fair value, which is determined either based on the individual assessment.
Yes. Cost or fair value, individual assessment. Very good. Absolutely correct. Yes, Sanjay, very good. And how will you value the long term?
Long term will be valued at the cost only, carried at cost.
Absolutely correct. Cost only. Now, coming to a point, which is the income recognition. Now, this was the investment, and on the basis of that investment, now I need to decide whether I should recognize the income accordingly or appropriately or not. See, this is again, as I said, it's a company. What if it would have been an NBFC? What if Prosper Holding Limited was a NBFC? Then the income recognition under the prudential regulations will come into the picture, and that will trigger. And as an investigator, you need to understand whether the income recognition is also in line with the valuation and classification or not. Are you getting the point? So these are certain things that you can do to check whether the investments are appropriately classified, valued, and income is appropriately recognized on these investments. Any doubt? Any doubt till now? Okay. Now, this was the various type of investment. Now, various type of investigation that we have discussed, like investigation on behalf of, it can be ordered on behalf of the incoming partner. It can be ordered like a bank. Now we will see one important type of investigation, that is fraud. Investigation for the fraud. Fraud investigation. Okay. Investigation for the fraud. There is one reporting requirement on the auditor also. Can anyone tell me what is the reporting requirement for an auditor for reporting the fraud?
Fraud that if it is 1 crore or more, we should report to central government.
Yes, under which section?
Section 213, clause 12. 243, clause 243.
243. No.
Sorry.
143.
Sorry, 143. 143, clause 12.
Yes, very good. 143, clause 12. Okay. 143, clause 12 requires auditors to look into basically, you can say, when they believe there is a fraud. Okay. Now, apart from section 143, subsection 12, there is 143.10.
Yes, sir.
There is
These are
section 143.10 which talks about auditing standards of auditing.
And
Okay.
also we could report to CARO as well. Class number 11.
Yes. Yes. Clause number 11. Plus, there is SA 240, which talks
SA
about auditor's responsibility relating to a fraud. Now, over there, the term fraud has been defined. Even section 447 of the Companies Act defines the term fraud. Okay. So, fraud basically means an intentional act which is done by one or more individuals. Okay. To gain unjust advantage, illegal gain. Okay. So, the target in fraud basically is to get some gain. That's the fraud basically. Okay. And when I talk about investigating the fraud, you investigate that particular, what you can say, activity, that particular act that we are talking about, which is done, okay, to gain the unjust advantage. Okay. Now, when I talk about basically fraud, there are, if I talk about investigation on the fraud, okay, it's not something that straightforward, it is easy. No. Fraud investigation is a very complex investigation. Okay, and there are multiple things which are involved into a fraud investigation. So, when I talk about fraud investigation, first of all, we need to understand what is fraud. Why it becomes very difficult when I talk about a fraud investigation, because we need to understand the nature of the fraud first. We need to understand what is the fraud, and then you can do the fraud investigation. You need to identify the intentional act. You need to identify the intentional act first. Then you can get the understanding of how fraud is done. Are you getting the point? Okay. Now, SA 240 talks about fraud. 447 of the Companies Act talks about fraud. But apart from that, there is a fraud also was defined under the erstwhile Indian Penal Code, which was section 25 of that, fraudulent. Okay. Again, section 415 was there of the Penal Code, which was describing on the term cheating. Okay. There was a punishment given under section 447A of IPC earlier, which was talking about punishment on the falsification of accounts. There is a definition of fraud in the Indian Contract Act. There is a definition of fraud in the Indian Contract Act, section 17. What is fraud? Okay. Based on that, you can say that there are multiple scenarios, or there can be multiple schemes through which a company or employee can do a fraud. However, all the scenarios, all the categories of fraud, all the schemes are divided into three major heads, are divided into three major groups. One is your fraudulent financial reporting. That means fraud relating to a financial reporting will be classified under fraudulent financial reporting. So fraud schemes which are on the financial reporting. Second is the misappropriation of asset. Fraud schemes to misappropriate the asset. And third one is the corruption, to get the unjust advantage. It is not to misappropriate the asset. It is not to do the financial reporting, fraudulent financial reporting, but it is to get the unjust advantage. Okay. So these are the three main buckets where the frauds are classified. To investigate a fraud, you need to first understand which kind of fraud you are investigating. It is not something I can jump into the water and check, okay, whether this kind of fraud is there or not. This kind of fraud is there or not. No. Over there, I need to understand the type of fraud first. And then on the basis of that, I can go and say, okay, this fraud has happened or not. Otherwise, I will not be able to understand and investigate the fraud appropriately. For example, when I talk about fraud with respect to the financial reporting, it will include fraudulent entries. Okay. When I talk about fraudulent financial reporting, this will include falsification of or alteration of financial records, fraudulent financial entries. Okay. Manipulations, fictitious journal entries. But you should be aware that, okay, I am looking for a fictitious journal entries, not any other type of fraud. So first of all, you need to identify the type of fraud that you are looking for, whether it's a fraudulent financial entries, whether it's a sales fraud, it's a collection fraud, expense related frauds, what type of fraud it is. Based on that, then you will perform basically the fraud investigation. Okay. Now, when I talk about different type of frauds, there can be 10 new categories also. For example, we have a lot of categories, we have a lot of specified over here, but there can be combination of schemes also. It's not just only these one. So this is not the complete list. This is the indicative list. There can be more type of frauds. With the passage of time, new schemes, new things comes. People invent. For example, simple example, we have a fictitious journal entry. Now, how the fictitious journal entries are carried out, it may change from fraud to fraud. Some might pass the fictitious journal entry by gaining the super user access. Some might pass the fictitious journal entries by getting the someone else ID. Like I have two different IDs, one for the preparer, one for the approver, and I pass the fictitious journal entries. So how the fraud is done, that's the very important part. Okay. And there are few things that we are required to look into to understand the fraud. Those are known as the red flags. So you are always required to look into the red flags to understand whether there is a fraud or not. Are you understanding the point? Let's say, for example, we'll take one example. Let's say cash receipts. Okay. Cash receipts. Now, if there is a fraud into the cash receipts, then in that case, how will you identify? Or how will you, first of all, identify there is a fraud in the cash receipts? Or there is something, someone is embezzling the cash from the company. Someone is taking out the cash from the company. Simple example, let's say there's a salesperson on the counter who makes the sale in the cash, okay, the counter sales which is happening in a company store, okay, let's say company is into the retail items. Now the person is sitting on the counter, he is doing the cash sales. How can you identify that this person sitting on the counter is not embezzling the cash that he is receiving? How can you identify that? Tally the total sales with the actual cash. Okay. Total sales with the actual cash. Anyone else? Something else, that how you will identify there is a fraud happening and the person is embezzling the cash that he has. The person is taking away the cash. Check whether all the cash is deposited on a daily basis. Okay. Bank statement. Okay. Daily reconciliation of opening and closing cash balance. Yes. Anyone? I'll tell you. What if, let's say, for example, a lot of you answered daily reconciliations or reconciling the cash versus the sale. What if the person who made the sale, okay, the cashier, okay, instead of recording the sale of 100, instead of doing that, okay, what he did is he issued an invoice first of 100, then he edited the invoice later on and entered a very big discount. Still you will be able to manage, or still he will be able to manage the cash and the sale. So there are scenarios that you need to think of, that okay, how he can manipulate with the sales. Segregation of duty, yes. There should be segregation of duty. I'll tell you. See, let's say for example, if a person, okay, if a person is collecting full amount from the customer, but he is passing a sale bill, or he is creating sale bill of only few amounts. Okay, instead of he is collecting 100, but he is providing bill of only 50 to the customer. Or he is providing the bill of 100, but he is showing discount of 50, but he is collecting full 100 rupees. He is adjusting fictitious credit for the goods received in front of the sale. Undercasting the receipt side of the cash book and overcasting the payment side. Somehow, doing the, what you can say, writing of the amount that is required to be collected from the debtor. So there are ways he can manipulate the debtor balance and the cash collected balance. And by way of that, he can take away the cash. Or else, what he can do is, at the time of cash collection, he can show that, okay, full cash collected 100 rupees, 100 rupees. Invoice 100 rupees. Later on, he can say that, okay, some payments were supposed to be made, or goods, or the customer came back and returned the goods, and we paid the amount back, showing a false refund. So there could be scenarios where, these sales, refunds, credit notes are adjusted. Okay. And you can find 10 different type of scenarios, 10 different type of these fraudulent scenarios. They can manipulate the cash receipts, they can manipulate the sale, they can manipulate the data balance, they can manipulate the billing process. Each and everything can be manipulated if you don't have the appropriate controls in place. But even when I talk about the investigation, okay, when I talk about the investigation, I need to make sure that I am aware about the red flags. I am looking into the red flags. Those red flags are known as the indicators of fraud. Have you heard about the fraud triangle theory? Can anyone tell me what is fraud triangle theory? Anyone? What was the fraud triangle theory? Okay. So the fraud triangle theory basically talks about three different type of fraud indicators. Three things. Okay. These are the indicators of fraud. If these three things are present, that means there are chances that there could be a fraud.
So incentive opportunities.
Yes. So one is your opportunity. What is opportunity? Opportunity is a scenario, okay, that means that the person can exploit a vulnerability in the system. Controls are not appropriate. That's an opportunity. My manager does not look into what I do. I have there is no segregation of duty. That's an opportunity. Okay. So opportunity is where you have the chance to do the fraud. Because there is some miss, there is some issue in the system, I can exploit that miss and I can do the fraud. That's an opportunity. Which is the next one?
Incentive rationalization.
Yes. Second is incentive. Sometimes it is also known as a pressure. Incentive or pressure. What incentive that is? If you will do the fraud, you will get this benefit. That means either you will get additional money by doing the fraud, or there is a pressure to meet the target. So to do that, I will do fictitious sale. Either there is an incentive or there is a pressure to carry out the fraud. And third one is a rationalization. Okay. Third one was the rationalization. So these are the three elements of the fraud triangle. Now this is a first theory for the fraud triangle. That means if these three elements are present, there are chances that there is a fraud. However, with the passage of time, there was one more element which was added to this particular scenario. So the fraud triangle later on was converted and one more element was added. Earlier it was incentive, opportunity, rationalization. Now there is something else. Earlier, this fraud triangle was then later was converted into fraud diamond. Okay, this is fraud diamond basically, which talks about the fourth category or fourth type of indicator to demonstrate that there could be a fraud, which is capability. Capability means a capability to identify that these three elements are present. For example, if I am a person, I don't know whether there is an opportunity or not, there is a incentive or not, or I can't think about the rationalization. I am not capable to identify the incentive opportunity. Then how can I do the fraud? So the capability of a person to carry out the fraud was later on considered important and was included, and that become the fraud diamond theory. Okay. Fraud diamond theory basically talked about that, okay, that capability factor is also important. That the person should be capable to exploit the opportunity, to identify the incentive, and is capable of doing the rationalization. That was the fraud diamond theory. There are multiple fraud theories. Multiple. There was a score model in 2019. There was, again, extension of the score model. There was mice model. There are multiple models of the fraud theories. But the famous one are the fraud triangle, and the fraud diamond. Okay. Clear till now? Okay. So there are also different models. The Pentagon model. Someone also added a one more element to fraud theory, which was this one, score model. Okay, that was capability, opportunity, rationalization. Someone added ego and stimulus. Someone also created another particular model on the fraud, which was basically extension of this score model, which was this hexagon model. They included collusion also. Different models available in the market. Pentagon, hexagon, a lot of things are there. Okay, score model, mice model, different. But the famous known are fraud triangle and fraud diamond. Later, other models are not that much, adopted or widely accepted in the market. Now, why these models are important? Why we are learning about these models? Because these models tell us or let us know that how to identify the red flags. They help us to identify the red flags. So, for example, if there is some red flag, if there are some indicators, we can see, okay, this is the opportunity indicator. This is the incentive indicator. This is how the rationalization might be done. This is how the capability is coming into the picture. So there could be a multiple, you can say, indicators which can be present, and these models help us to identify those indicators. Clear? Any doubt? Now, again, I will not go into the much of the detail of different type of models or in case of the red flags. Okay, but the thing is that as an auditor, okay, or as an investigator, when we are doing the fraud investigation, we have to first of all identify these red flags. You have to investigate based on these red flags only, based on these elements only. Then only you can complete or you can reach to a conclusion. And there is a theory also, and there are ways also to perform the fraud investigation. Okay, hypothesis model, a lot of things are there in that. It's a very complex area. Okay, but understand that whenever we are doing the fraud investigation, the starting point is identification of these particular fraud indicators. You look for these fraud indicators. or whenever the fraud investigation happens, it's not like, okay, they will tell you there is a fraud. Rather, there is a suspicion. Okay, there is a suspicion that the fraud has happened. And your role comes into the picture that, okay, go and verify whether actually there is a fraud or not. Sometimes you receive a whistleblower complaint. And that whistleblower complaint is required to be investigated whether in actual there is a fraud or not. And at that point in time, these indicators help us to identify whether the fraud is there or not. Or they take us towards the fraud, rather. Clear? Let me take one question on the similar lines. Okay. Now, again, straightforward question, nothing complex in this one, but very good question, because based on this question, we will understand about fraud investigation. Wait a minute. Okay. So I'll read the case study first.
Electroworld Limited, a large retail chain selling electronics, has reported a sharp decline in its profit margins despite steady sales figures. The internal audit team has flagged several discrepancies in the accounts, leading the management to suspect fraudulent activities. Several cash sales were recorded, but the full amount collected was not deposited. Instead, smaller amounts were entered on the counterfoils. A customer returned a high-value television, and a credit note was issued. However, the customer claims they never returned the item, yet their account shows a credit adjustment. The cashier was found to be casting the receipt side of the cash book lower than the actual total. Some debts that were previously written off as bad were suddenly recovered, but there is no trace of the cash entry in the official books.
And you are a forensic accountant appointed to investigate into these irregularities. Now, what you need to do is, you need to identify the methods or device used in each of the 4 scenarios which are used to embezzle the money. Okay, let's say scenario number 1. Several cash sales were recorded, but full amount collected was not deposited. Instead, smaller amounts were entered on the counterfoils. Can you identify what has happened in this particular one scenario? Scenario first. Can you understand and identify what has happened in scenario first? Anyone? Simple. It is that the full amount was collected, but smaller amounts were entered on the counterfoils of the sales. So cash sales was recorded, full amount was collected, but only partial amount was shown as a collected, not the full amount. So instead of full amount, what is shown is that a receipt has been issued for the full amount collected, and only a part amount has been entered into the counterfoil that is maintained at our side, that the company's side. Means you are showing to the customer that they have paid the full amount, but in your books you are showing only partial amount, or the part amount has been collected. Counterfoil is something that we keep it with ourselves. Second, a customer returned a high value television. and a credit note was issued. However, the customer claims they never returned the item, yet their account shows a credit adjustment. This is the fictitious credit. This is the fictitious credit scheme. Here, in this particular scenario, a fictitious credit has been booked. Why? Because later on, this fictitious credit can be used for their own purpose whenever they need it. Okay. In second number, this fictitious credit can be used for their own purpose. For example, customer never returned the television. Okay. But a credit note was issued. That means money was taken out of the books. That, okay, someone is returning the amount. The credit note has been issued. Now the credit note can be used in future against any of the purchases or any of the later on sales which will be done by the customer, and that can be used for their benefit. So fictitious credit which will be used later on. Third, the cashier was found to be casting the receipt side of the cash book lower than the actual total. So receipt side, he was casting lower than the actual total. Why? So that the rest of the difference can be taken out of the books. Later on, when the difference, let's say for example, the actual total is 100 rupees. I am casting it 90, like balance carry forward 90. Then I can take it out the 10 rupees from the books of accounts. Some debts were previously written off as bad debts were suddenly recovered, but there is no trace of cash entry in the official books. That means someone has collected the cash, but they have not recorded in the books of accounts. So these are certain examples in front of you for the embezzlement of the money that is done. And when I talk about these particular fraudulent scheme, one was short booking on counterfoils, one was fictitious credit, one was casting error related, one was misappropriation of recovered debts. So these are certain schemes through which fraudulent money embezzlement of money can happen. Any doubt? Just an example, simple example, okay, to show you how embezzlement of money can also be done. Any doubt? Okay. If no doubts, let's take a quick 10-minute break. After the break, we'll gather back and continue the discussion. Let's take a quick 10-minute break. session. So now we are going to discuss one important topic, very important topic, that is forensic accounting. Can anyone tell me what is forensic accounting? Before we do a deep dive over here, what is forensic accounting? Anyone? What is forensic accounting? When you hear this term, forensic accounting, what do you understand by that? Come on, guys. Forensic accounting. Anyone? Basically, when we talk about forensic accounting, okay, when we talk about the term forensic, okay, it is something related to the evidence being admittable, being suitable for the court of law. When I talk about forensic accounting, okay, it is for sure that the case, the dispute, everything will be used in the court of law. These things will be used in the court of law. That means that whatever we are doing, we will be, or our evidence, our report will be used in the court of law. Now coming to the part where when I talk about forensic accounting means that I am gathering the evidence with the help of accounting techniques. I am gathering the evidence with the help of accounting technique which will be used in court of law. Okay. So the end goal over here in case of forensic accounting is that my evidence, my report that I have collected will be used in the court of law for a particular dispute. Are you getting the point? Okay. Now coming to a part where we talk about forensic accounting. Okay. Now if I talk about the term forensic accounting, over here I am using my accounting expertise to gather the evidence. And this is not an audit. Forensic accounting is not an audit. It is different than the audit. When I talk about statutory audit carries on that, okay, true and fair view, overall books of accounts, okay, substantive control testings, sample-based testing, materiality. But when I talk about forensic accounting, that is the objective, first of all, is to discover the facts and evidence. In investigation, basically, if you see, I am not saying that it will end up in the court. The report might not be used in the court. But in forensic accounting, definitely the report will be used as an evidence in the court of law. The report will be definitely used in the court of law. Okay. So the forensic accounting term or the forensic accounting engagement is from the legal side always. Here you have to focus on either proving or disproving a particular transaction balance or a dispute. Most of the students, most of the people understand that forensic accounting is fraud investigation, which is not correct. Which is not correct. That is absolutely incorrect. Forensic accounting is not equal to fraud investigation. First of all, understand that. Okay. Forensic accounting is not equal to fraud investigation. Then most people ask me a question, what is the difference between then forensic accounting and fraud investigation? If they are not equal, then what is the difference? Because in forensic accounting, we also look for the fraud. In fraud investigation also, we also look for the fraud. Then what is the difference between both of them? Can anyone tell me the difference between both of them? Anyone?
Sir, actually, it's just a study and interpretation of the accounting evidence, where the investigation and prosecution of the criminal act, it's a fraud is the one of the items. It can be embezzlement of the asset as misappropriation of asset, or some criminal, or evidence is not correctly produced or submitted. There is a falsification.
Yes. Very good.
Their particular intention is more likely it's not conducting that as the affairs of the company.
Okay. Now, when I talk about forensic accounting, okay, when I talk about forensic accounting, it is simply, when I talk about this, it is I gather and evaluate evidence. Gather and evaluate evidence. Okay. But this gathering, evaluation of the evidence is done by a professional with an objective to report finding before court. Objective is report finding before court. When we talk about investigation, remember we saw various type of investigation, statutory, non-statutory. When I talk about non-statutory investigation, you do not present in front of court. No, there is no court involved over there. Here in investigation, it's a systematic and examination of facts and records for a specific purpose. Now that specific purpose can be for anything. Okay, so here it's a systematic and critical examination. Again, of evidence. But here objective is specific purpose. That is, sometimes it is ordered by for the purpose of loan. Sometimes, no, I'm not talking about fraud investigation. I'm only talking about investigation as of now. So sometimes it is done by the incoming partner. Sometimes it is into the specific ownership of the company. So investigation is for a specific purpose. You know why investigation is being carried out. Okay. So the objective of the investigation is already known. So either it is for the ownership of the company, affairs of the company, by the incoming partner, for the net worth, for the trade receivables, there are matters, or there is a fraud. Fraud is one of the type of investigation. But when I talk about forensic accounting, it is way beyond that. Because here I am saying that I am doing for the court. Here the legal side is involved. Always by default. So I always understand that in case of a forensic accounting, there is a litigation and things will go to the court. Fraud investigation is, and if I talk about investigation, okay, if I talk about investigation, Now, these terms, forensic accounting, investigation, as I said, investigation is more of a generic term. Forensic accounting is a bit of specific. And fraud investigation is part of one of the investigation category. Okay. Now, when I talk about forensic accounting, it may involve fraud, it may not involve fraud identification. Forensic accounting can be done for the fraudulent transaction, cannot be done for the fraudulent transaction. It can be for anything. Okay. Anything where I am using my accounting accounting or financial knowledge, financial expertise to gather the evidence. May be fraud, may not be fraud. Are you understanding the point? So it is, you can say, a wider concept. Forensic accounting is a wider concept compared to your fraud investigation. Now coming to the very important part, forensic professional. Okay. For what purposes we can appoint a forensic accounting guy or a forensic professional? One, it can be for the financial statement manipulation, for anti-money laundering related evidence, for related party valuation, transactions valuation, for suspicion transaction under IBC, for fund diversion, for license and tax or tax evasion, for valuation, estimation of loss or damage in case of a contract. So there are multiple scenarios where you can hire a professional forensic accounting professional, forensic professional, basically, whose role will be to perform these kind of, gathering the evidence and present to the respective court. Now, when I talk about the process of forensic accounting, it is not different than what we saw in the investigation. It is something similar. It is something similar. Just one thing we have to add over there. Okay. So what was the process for the investigation? What was the process for the investigation? Something we saw, OPEAR. Remember? What was that? This is objective and scope, planning, execution or evidence collection, analysis, and then reporting. Yes or no? This was for the investigation. As I said, if you add a court proceedings, legal side to the investigation, you will get forensic accounting. Same, it will be reflected in the process. So if I just add the court proceedings over here, it will become for forensic accounting. How? Let me show you. First, initialization. That is where you understand the objective and the scope of the engagement. Okay. What is initialization? Is where you understand the scope. Okay. Why this engagement is there. The real motive, purpose, utility of the assignment, the scope and objective of that particular assignment. It's the initialization. Then you develop the planning part. In case of these type of engagement, you have to appropriately develop the plan. You gather the evidence. Then you perform the analysis. Then there is a reporting. So this step, if you see, OPEAR will always be there. But now one step ahead is a court proceedings. This is the additional part, which is there in the forensic accounting. Okay, this is the additional part now in the forensic accounting, court proceedings. That means now my case will definitely go into the court, and for that I should be ready. Clear? Any doubt? Any doubt till now with respect to the process of forensic accounting? Okay. If no doubt, then let me take up one more thing. Now, this is a process. Fine. Agreed. But the question comes is that is this kind of process is required to be followed every time? The way we have the Companies Act's provision for the investigation, do we have anything for the forensic accounting? Or how the forensic accounting is basically governed? Can anyone tell me, like, how this forensic accounting is governed? Anyone? Is there any law, regulation to govern this kind of forensic accounting engagements? Is there any kind of law or any provision or which is required to be followed? Yes, no? Anyone?
Sir, like we have the standards on auditing, there is a forensic accounting standards.
Yes, absolutely correct. So there is the forensic accounting and investigation standards. Okay, I'll show you like how they work and what is the basically forensic accounting and investigation standards. Okay, just a minute. It's taking time to open up. This is the Compendium of Forensic Accounting and Investigation Standards as on September 2025. Now, this is issued by the Digital Accounting and Assurance Board of ICAI. Okay, this board basically looks after for the, you can say, formulation and drafting and all the initiatives on the forensic accounting. Okay, now, basically, if I talk about the structure of these standards, the way we have engagement and quality control standards, similarly, we have forensic accounting and investigation standards. So it is divided. You have a preface, you have a framework, you have a basic principle. This is the underlying framework for the forensic accounting and investigation standard. They are also known as FAIS. Okay. And then you have a various standards that FAIS 110, 120, 130, 140, 210. These are the standards on key concepts: fraud risk, laws and regulations, applying hypothesis. Then you have engagement management standards: engagement objective, engagement acceptance and appointment, using the work of an expert, engaging with the agencies, communication with stakeholders. Then you have standards on executive assignments. Execution part, that planning the assignment, documentation, worker procedures, interview, supervision, okay, and testifying before a competent authority. Then you have a specialized area. Then you have a reporting related. Then you have a quality control. So you have a various standards in this particular list, which are basically issued already, okay, and which a professional, forensic professional is required to follow while performing a forensic accounting or investigation engagement. Okay, so for example, let's say 510 reporting results. So this standard basically is important when we are issuing or preparing our reports. Okay, so when we are preparing the reports, this standards becomes very important, very critical, and that is required to be followed. Now the question comes is, are these standards applicable to you, or whether all these standards are applicable to you? So answer is, not all the standards are applicable to you, but standards to the extent which are given in your study material. Okay, for example, we have standards on report, that is 510. Okay, we have other standards somewhere mentioned in the study material. We have mentioned about there is a basic framework. Okay, framework governing the forensic accounting, that is mentioned. So those things are covered. The things which are mentioned in your study material are covered. But apart from that, the things which are not there, other standards are not covered as of now. Okay. So the rest, whatever we will be discussing, will be for your information purpose. Okay. Now coming to the part we were talking about, reporting. Report. See, how to carry out the investigation, forensic accounting assignment and investigation assignment, there are various standards given. You need to follow all the standards the way we do for the audit. It's not something that, okay, you can go and perform forensic accounting engagement the way you want. No. Because at the end, the engagement's outcome will be used in the court of law. So it is, you have to make sure that is the whatever report you have prepared, it should be admissible in the court as an evidence. Now, for that, we need to understand how and what are the things that we need to take care while preparing the report. Oh, okay. And what are the requirements of FAIS 510? That is reporting results of the forensic accounting and investigation engagement. Basically, when I talk about this standard 510, okay, this standard provides the way our auditing standard provides the requirement. This standard also provides the requirements. And we will go through these requirements to understand how and what are the things that we should include in our report. The first thing is that when you are writing a report, your report should be precise and unambiguous. That means it should be clear. It should be specific, unambiguous. Now, what is unambiguous? For example, when you are writing a report, okay, so what may happen that I will show you one example of the report. Now, this is very, very shallow report. The report that I'm going to show you, it's just a summary report. It's not an actual report, okay? It's just a summary report, but basically, these reports are not available freely in the public domain. That's why I'm showing you the report which I have. Just a minute. Just a minute. It's taking time to open up. Okay. Again, this is an international report, not an Indian one. But this report has a few things that we can discuss. Okay. Okay. Now, this was one of the report on the investigation. Okay. Which was then used in the court of law. We can take a reference over it. But if you see the report, basically when it says that it should be precise and unambiguous, that means you should provide the details to the report appropriately. That means with the amount, wherever the name of the person is there, that name of the person, okay, what you need to specify the dates precisely, okay, whatever dates are there, whatever amounts are there, okay. And let's say, for example, if there is a testimony, there is something, oath, on oath, you have taken some, like evidence or anything. So all those things are required to be provided in this up precisely with the date, with all the things. Okay. Then you need to provide the detail. Unambiguous means you need to explain everything clearly and appropriate in your report. It should not be the thing that you leave something open, that it might have happened. It may or may not have happened. No, these kind of wordings are not allowed. It should be precise. Now here some of the evidence, some of the things are hidden, not appropriately reported, reason because of the confidentiality. Okay. But here still you can see all the things or exhibits are provided in the report itself. That means the report is precise itself. Okay. These reports are precise itself. That contains the relevant details, the relevant evidence and everything. But for the public domain, these details are not shared, and that's why you see the boxes over here. Otherwise, all these things, all these informations are required to be included in your report. Okay. Then, that was the requirement of unambiguous and precise. Then, the report shall be addressed to the primary stakeholders or other stakeholders. Now, who are the stakeholders basically? Stakeholders are the person who has appointed you. So, your report should be addressed to them. Okay. Your report should be addressed to those particular people. For example, if you have been appointed by a court, then it should be addressed to the court. Then there should be there is no fixed form or content of the report. That means the way we have in the audit report, like this paragraph, this paragraph, this paragraph, there is no mandate like that way. A report is required to be drafted based on the investigation or the evidence collected. But you should include certain things in your report. Okay, certain key elements to enable the understand the purpose of the assignments. So your report should include few key elements that should help person understand that, okay, what is this report about? What are these key elements? Title, address, distribution list, if any, scope and objective of the assignment, approach and broad work or procedures undertaken, executive summary, reference to expert if there is an expert which is being used, that the assignment has been conducted in accordance with FAIS, list of findings supported by key evidence, source of evidence and other matters, assumptions, limitations, disclaimers, conclusions. So this is the thing that are the minimum required in your report. This is indicative list at a minimum required. Okay. Then once you do that, the report, the form and content of the report, okay, should be in line with the requirement. So the form and content of the report should be in line with the regulatory or statutory requirement. Now, what is the regulatory and statutory requirement? Basically, there are guidelines, there are a lot of things, a lot of times, the statutory authorities provides to us. Okay. So these guidelines, let's say, for example, reporting guidelines. Okay. Sometimes there are reporting guidelines already issued by a statutory body. Now, in that particular case, those guidelines with respect to the form and content are required to be followed. So you should discuss before, finalizing the report. So discussion is required prior to finalization. Okay. You are required to highlight any key assumptions or any key limitations with respect to the assignment. Then you need to document whatever basically procedure you have followed with respect to the particular report drafting. So when I say discussions, when discussions happen, whatever discussions happen, you are required to report, document that. So documentation is very important. Okay. At all these steps, when this report is there, then you need to follow the relevant timeline. That means that report is required to be issued within the relevant timeline. Whatever timeline is there, you need to follow that timeline, and within that given timeline, the report is required to be issued. So reporting timelines are required to be adhered to. Reasonable time should be used to issue the report. See, in audit, we have what you can say due dates. We already have the due dates, correct? Within which we need to issue the audit report. But in case of forensic accounting or investigation engagements, you don't have that particular timelines. You don't have any due dates. However, there are dates which are assigned under the order itself. There may be a date which may be assigned under the order. You need to basically adhere to those timelines. You need to adhere to those dates which are provided in the order itself. Clear? Sorry. Okay. Then, if required, you may provide an interim report. Okay. If required, you may provide an interim report before providing the final report. So this is a requirement of this particular standard that you are required to follow. Again, for the public, I have a very limited, public information available or reports available. I have one more sample report just to show you a sample report on the fraud investigation of a business. Again, this is a sample report. This is not something an actual report which is available in the public domain, but let me show you. Okay. Again, this is sample report. So you have an executive summary. Okay, you provide the details. The fraud examination commenced by this person. He received a telephone like this, all those details. Okay, the duration, like from where to where the information was collected. What was the scope? Okay, for example, you need to tell. Okay, what was the scope of fraud examination? To determine the existence of possible misappropriation of assets by a particular company, by a particular person, or something like that. Then approach. What approach you have followed in the fraud examination? For example, procedures that you have performed, the team members you have. Okay, procedure. For example, obtained, reviewed, analyzed memorandums, obtained or reviews the books, obtained or reviewed the records. Okay. Then you have an individual who are interviewed. You need to provide the details of those. What are your findings? You need to document your findings. Whatever findings are there in a precise way. Okay. All these are the findings which are provided over here. Then you have to provide a summary of whatever you have done till now. What is the outcome? Okay. Impact to the company. If there is any financial impact to the company. What are your recommendations? This is optional section. And then end of the report. That's a report. So this is how you can draft a report. But in real life scenario, these reports are in much more detail. They may run up to 100 pages or maybe more detailed one because you have all the evidence attached to the report. In real life scenarios, your evidences are part of the report. So report becomes more detailed. Okay. It's not like audit, just we issue the pre-written audit report in a predefined format and that's done. No. Here, the report contains all the informations, all the evidence in the form of annexures. A lot of details are given in these reports. Okay. So Based on that, then the report is prepared, so that the person who is receiving the report can go through the details which are attached behind, and accordingly he can understand. Clear? Any doubt? Any doubt till now? See, there are multiple, what you can say, sample reports available, because there is no standard format for a forensic report, forensic accounting report. The report may change based on the engagement. Okay. So there, the format can be the way you want, but there are minimum things which are required to be included. So those things is something that you need to include in your report. But apart from that, the form and content may be the way you want. Okay. In the purview of the standard, it can be the way you want, but basically, minimum element should be present. Okay. Now, when I talk about these standards, basically, so as I say, there are standards, then there are few things which are part of the standard, preface, basic framework. So what are these basic frameworks? How the standard is designed? Basically, first you have the basic principles of forensic accounting and investigation under these standards. Then you have the key concepts. Then you have the standards, and then the additional guidance which is given in the standards. All these things are part of the entire framework of the standard. Okay, entire framework. The basic principles, key concepts, standards, and the guidance. Now, I'll show you something. When we were discussing this part, these key elements and everything, this is the guidance, explanatory comments which are given to the requirement. This is part of the standard. Okay, this is part of the requirement of the standard. But before this, there is something called the basic framework and the basic definitions. So there are basic principles of a particular FAI. That's a forensic accounting and investigation engagement. Okay, what are these basic principles or basic principles that we are talking about? I'll show you. So when I talk about these basic principles, okay, these are the same principles which we have seen in the code of ethics on a similar lines. These are independence, integrity, objectivity, due professional care, confidentiality, skill and competency, contextualization of the situation, primacy of the truth, respecting rights and obligations, and separating facts from opinion. Okay. And the last one is the quality and continuous improvements. These are the 10 basic principles of forensic accounting and investigations that each and every professional is required to follow. So these basic principles, fundamental principles, are required to be followed every time whenever a forensic accounting or investigation engagement is carried out. Okay. This is part of the framework. Now, post this, there are few concepts. As I said, one was the basic principles. Then there are the key concepts of this second pillar of this entire framework. What are the key concepts? I'll show you. So the key concepts are integral part of the FAI domain. Okay. And they are like, this is an indicative list, but they are nature of engagement, fraud risk, laws and regulations, applying hypothesis. These are the key concepts. Remember standard 100 series. So these key concepts you need to understand and you need to apply accordingly for each and every forensic accounting and investigation standard. Okay. These basically key concepts are required to be applied accordingly. They are critical. They are very critical. Okay, and for that you have a you have a one standard that is addressing these key concepts. For example, you have a standard 110 to address the nature of engagement. You have various other standards to address the other key concepts. Okay. The third element of the entire framework is the standards. Rest of the standards we have seen. Okay, the list we have seen. Then you have the definitions. There are few definitions which are provided as a part of the framework itself. Key terms which are part of the framework itself. And these are the very important definitions. Like, for example, professional. Who is the professional? For example, forensic accounting, investigation, litigation, fraud. Okay. So these are the some key definitions, again, which are part of the framework, which are very important. And then you have code of ethics as a base for everything, which is required to be followed. Okay. This is how the entire framework of forensic accounting and investigation is there. This is the entire framework governing the forensic accounting and investigation. The pillars that we discussed, code of ethics and the definition. Clear? Any doubt with the entire framework? Again, this is also given in your study material, the entire framework, how it is there. And you have the list of the standards. As we discussed, SA 510 we have discussed the framework. The rest of the standards are only mentioned over here. There is no further discussion. So that will not be covered in your exam. Clear? Any doubt? Any doubt till now? Okay. If no doubt, let us take some questions which are given already in your study material. Very important questions are there for your understanding. Do we have to remember the list of FAIs? Answer is no. Only the standard we have discussed in detail. 510. Okay. Let's discuss important questions which are there on this particular topic, which are also given in your study material. Okay. So the question is, CA Rajpal is performing forensic accounting engagement involving gathering of the evidence in relation to the suspected fraud of the substantial amount in a company. He has been appointed under the terms of contractual agreement with the company. The company operates in an electronic environment. While performing the engagement, his team has gathered evidence from the electronic record in the ERP system, ERP Enterprise Resource Planning System, messages in the company's email system, and also from the system log and audit trails generated by the company's computer system. However, while doing so, the team has failed to take care of aspects such as keeping records of each person in gathering relevant evidence, date time of collection, storage of such evidence. What implication may it have on the forensic accounting engagement as such? Take a minute. I will just zoom out a bit so that you can read the entire question. Okay. Now, question number 8. Read the question, take a minute, then we'll discuss the answer. Take a minute, read the question, and then try to answer. Okay. Tell me. So what do you think in this particular scenario? What would be the implication? Anyone?
So the implication, first of all, during the forensic accounting, whatever the evidence they have collected, they have to kept in record, which has to be produced to the court of law.
Yes.
Actually, here they fail to keep the record while they are doing that evidence collection process. Definitely, the implication of the forensic accounting engagement, this is a main objective that it has to be maintained. Otherwise, how they can, when they are discussing at the court, if the opponent party they are asking, means they cannot be able to produce the evidence. The evidence is main document.
Okay.
They failed actually in this case.
What else? Any other thing that you think might be relevant in this scenario which was not done?
And date and time also is very important. When they collected the information, what date, what timing also is very important.
Date and time. Yes. Okay. Anything else that you think might be relevant over here? Okay. I'll tell you one thing. Now, when I talk about forensic accounting, okay, so there is, remember, we have seen that here in forensic accounting, what is the main thing? That it will end up in the court of law. For sure. It will end up in the court of law. Now, there is a concept in the court, in the evidence, basically. Evidence can only be admitted or evidence can only be accepted as a genuine one. There is one thing that you have maintained. That is the chain of custody. That is a chain of custody. That means who gathered the evidence from there, from that particular place where the evidence went, in which file it was stored, who held that. So entire thing. So here, if you see in this particular question, what they are saying is, okay, fail to take care of the aspects such as keeping the records of each person in the team, gathering relevant evidence, date and time of the collection, storage of such evidence. That means they failed to maintain chain of custody. Chain of custody is very important. That shows that who collected the evidence, from where they collected the evidence, the source. Okay. After that, where that evidence was stored, like storage of such evidence. Okay. And it shows with the date and time and trail. It's the evidence trail available. Till that time you don't have a trail available, court will not accept that particular documentation or whatever you have collected as an evidence. Okay. So chain of custody is very, very important in case when we talk about the evidence. I'll show you something with respect to the chain of custody. And this is a, one common concept of, you can say, evidence collection and evidence, being used in the court of law. So till now, when you do the audit, you don't talk about chain of custody. You don't talk about chain of custody in audit. Okay, there is no chain of custody of evidence in the audit. If any one of your team member collected the evidence, documentation, and if they stored in their system, it is stored. You don't ask them, okay, you stored in this system, you have not maintained that record from where you collected and all those things, then it becomes irrelevant. In audit, that is not that much detail. But in case of what you can say, in case of evidence being admissible in the court of law, chain of custody is very important. For example, I'll show you an example. Let's say there was an email. Okay, an email. This was email about a fraud transaction which was done by Mr. A. Mr. A issued this email. Okay. Mr. A issued this email and he basically he provided details about that fraud transaction in this particular email. Now, the fraud accounting expert collected this email from system. That is the backend system where all the copies of email are stored. Basically, they are known as a mail exchange system. Now, after collection from that particular point, it was stored in the computer or PC of forensic accounting investigation professional or forensic professional. Okay, it was stored in the computer of forensic professional with the date and time. Now, let's say, for example, if this thing is not present, then what will happen is when this mail will be presented in the court, Mr. A can deny that this mail is not from the mail exchange. This is not the official mail. This is a fabricated mail. Just because we have this date and time when it was collected and when it was stored, you have a chain of custody showing that this mail has actually been extracted from mail exchange, which then will be admissible in the court. Otherwise, Mr. A can come into the picture and can say, oh, this is a fabricated email. This is not collected from the mail exchange system. There is no such mail. Then how the court will accept that email? That's the chain of custody. From where it was obtained, where it was stored, and how it was used. All these things are required to be documented. So in this particular scenario, in this particular question that we are discussing, the chain of custody is missing, and hence the evidence collected from the electronic records in the ERP will not be admissible in the court of law. Will not be admissible in the court of law. Clear? Clear? Any doubt? Now, there are various provisions under Indian laws, okay, which talks about chain of custody. There are various provisions or laws or regulations which govern this type of thing. It's not something. It's not something. Just what you can say. Just principle which is followed, but it's a basically required part of the law. Okay. For example, section 63 of the BSA. Basically, when I talk about BSA, that's a Bharatiya Sakshya Adhiniyam, which has replaced the earlier act or earlier laws. Okay. So BSA section 63 provides about the governing, it's a governing section on the admissibility of the electronic records as an evidence. Sometimes it requires double certificates. Okay. Like who obtained the evidence, collection, transportation, storage. A lot of things are there in that. Then there are various case laws, which talks on the provision or which talks on the legal principle of the chain of custody. Okay. Then again, there are other laws in, let's say, CRPC. Over there also, there is a chain of custody principle. So there are various laws where chain of custody is important and is specified. Okay. Let's go to the next question. Again, very important and very good question it is. Question number 9. Mr. Rajat, while reviewing an anti-fraud control for a construction company, found that the company has witnessed a few fraud in the past, mainly in the nature of material theft from the site and faced expense vouchers. Mr. Rajat is evaluating options for verifying the process to reveal the fraud and the corrective actions to be taken in such case. As an expert in fraud prevention, you have been asked to brief Mr. Rajat about the inventory fraud and the verification process with respect to the defalcation of the inventory. Take a minute, read the question again, and then try to answer what is asked. What is asked in the question with respect to the inventory. Take a minute, read the question again. What you will provide, how you will explain about inventory fraud, verification procedure of inventory, and how you can do the identification of the defalcation of the inventory. Come on, guys. Inventory fraud. Come on, come on. So how will you, identify the inventory fraud? Anyone? What is inventory fraud? Okay, tell me. Give me some example of the inventory fraud that you have understand till now. Inventory may be replaced with the defective one. Yes, okay. Inventories may be replaced with the defective one. What else?
The same person receiving the entry, the inward receive entry, then the same person is accounting. The is not there. Again, will create the incentives, opportunity, rationalization, all will be there for the inventory fraud as well.
Okay.
See, the high value items, the small items, they can remove from the, they can take away.
Okay, yes. I'll tell you. Inventory fraud, that means simply taking the inventory out of the premises without any entry in the books. Okay. Theft of inventory, theft of goods without concealing. That means it will show in the books of account, but in physically it is not present. Or sometimes to manipulate or to hide the inventory fraud or inventory theft, they will manipulate the books of accounts. When I talk about manipulation of the books of account, what they will do? Either they will be showing as a damaged and then written off. Either they will be showing, lost in the transit. Okay. Or it may be shown as an obsolete or non-moving, and it will be provided and written off from the books of account. Or they will definitely sometimes sometimes what happens is, when these type of frauds happen, what they do is inventory is first taken out of the warehouse. Okay, there is a theft. Then they show there is a inter warehouse transfer of that particular inventory. And in the inter warehouse transfer, they show that the inventory got damaged in the transit, and it never reached to the particular premises. Or at times, what they do is they show that inventory has been taken out to transfer to some other warehouse, and there is no inward entry in the other warehouse. So that inventory always remains in transit. Or somehow they pass an adjustment entry which does not reflect in the financial module, but in the inventory module, inventory will be somewhere in the between. So usually in ERP, you have a different modules: inventory module, warehouse module, financial module. So they may somehow pass the entry of transferring the inventory from one warehouse to another warehouse in the inventory module. That will not have an impact in the financial module. So when you see in the financial records, you will see the inventory in the financial numbers, but when you go and count, you will never see in the inventory records. So somehow these manipulation happens. And how to identify? First, you need to check whether there is an inventory control, that whatever movement is happening for the inventory, there should be a control on that. Sufficient data should be available from the financial module and the inventory module to perform the reconciliation. Physical verification of the inventory records. If there is an inventory in transit, then it should not take the time which is required, more time than what is required for the transit. Okay. If there is an inventory damage during the transit, check the insurance records, whether any insurance claim has been filed. If yes, then whether the insurance person has done the survey of the damaged goods or not. And if no, then you need to understand why the damaged goods were not kept for the insurance. And if they are not then kept for the insurance, is there any independent person who has done the survey of the damaged goods before discarding or before removing them as a wastage or damaged goods? If there is a shortage in the inventory, whether appropriate search has been carried out to identify the missing inventory. And if there is a shortage, then is this a frequent shortage? One-time shortage? What is the materiality of the shortage? So all those things are required to be understood before you go and evaluate the inventory. So these are the procedures you can perform to identify the inventory fraud. Clear? Any doubt? Any doubt? Now we will take one simple question, but very important question. Okay. Let me take it up. Let me read the question.
Global Ventures Limited, a multinational conglomerate, has recently faced allegations of financial impropriety in its Indian subsidiary. The allegations involve complex kickback schemes and potential money laundering activities hidden within legitimate business transactions. The audit committee is debating the next course of action. One member suggests that the statutory auditor, who is currently finalizing the annual accounts, should simply expand their scope to uncover these schemes. However, the chairman argues that the nature of the issue requires a different set of skills and a different mandate, specifically, forensic accounting. Required. You are an expert invited to advise the audit committee. Clarify the distinction between forensic accounting and audit.
So simple, you need to tell me the difference point-wise between forensic accounting and audit, statutory audit. Point-wise difference. The way you will write in the answer. The way you will write the answer in the exam.
Sir, objective of the audit, that audit is we will give the true and fair fair view of the reporting. But in the forensic accounting, it's not true and fair view, but actually the evidence finding.
Okay.
Here we will do that compliance, that we will do the sample testing, we will take it out, and accordingly we will get this audit evidence. Here we will do the depth and understanding in the forensic accounting.
Yes.
Period, normally that in audit, let's say 3 months, in case of interim audit, in case of full year, the 1 year will be there. But when we are talking about the forensic audit accounting, it's not a particular year. It may be more than a year or 5 years or 10 years, like that. Period is not these things.
Okay.
While we are giving the reporting, we will give that reporting as per the SA 700. There is a reporting for the SA 705, also the qualified report, adverse report, like that we will give that. And in case of the forensic accounting, as per the SA 500, we will give 510 or 500, I believe. We will give the reporting. But it's actual finding we will give.
Okay. Yes. Yes, these are the very good differences. So, in order to write the answer for this particular question in exam, okay, what you can do is, you can, provide this answer in a tabular format also in exam. Okay. Yes, Sanjay, very good. So, what you can provide the answer in tabular format. For example, objectives. So, objective is to true and fair presentation in case of audit. In forensic, actually whether that has taken place or not, the fraud or whatever, the scenario is there, has taken place or not. Techniques. You do some substantive and compliance, sample-based auditing. In this, it's an investigation, substantive or in-depth checking. Period, normally for the accounting period. In case of forensic accounting, there is no limitation. It can go up to 3 to 4, 5, 6, 7 years, whatever it may be. Okay. Verification of stock, realizable value of assets, all these things, sometimes either based on the management representation or you collect the evidence for that. But in case of forensic accounting, there is no concept of management representation. You have to do independent verification of entire thing. Okay. The mentality, basically, okay, when I talk about audit, it is you have to be, you need to maintain professional skepticism. Okay. But in case of forensic accounting, I'm not talking about professional skepticism. It's an investigation mentality. You have to be alert. Okay, it is investigation. You have to assume there is a fraud. Investigation mentality, it is beyond professional skepticism. Like, remember, in audit, we say that we are not doing a fraud investigation, so we don't have to go from that mindset. But in case of in forensic accounting, it is that mindset that is kept beyond forensic professional skepticism. That's why it requires in-depth checking. So this is how you can write an answer for forensic accounting versus audit in the exam. Clear? Any doubt?
Sir, in case of statutory audit, the auditor should qualify the CA, but forensic audit, there should not be the CA. Other than CA also
No,
can
it's not
do
like
that.
that. It can be CA. A CA can also do forensic accounting.
The CA also can do forensic, but the CA compulsory is not there.
Yeah, compulsory it's not there, but yes, CAs are accepted. They are more accepted in case of forensic accounting because we have a very good financial and accounting knowledge. Clear? Yes, Sanjay, very good. Chain of custody, very important. Very good. Any doubt? Any doubt?
No, sir.
Okay. So if no doubt, basically, what we can do is, this was your chapter number 70 that we discussed. Okay. Now, let me take a few small questions that will help us to, what you can say, quickly revise the particular chapter. So this particular, these questions will help us to revise the chapter quickly. And you have to answer in a speedy way because these are very simple and quick questions for the revision purpose. Number 1. Due diligence implies a general duty to exercise dash in the transaction. Authority, power, care and prudence, speed and efficiency, statutory control.
Care and prudence.
Very good. Care and prudence. Yes. Very good, Sanjay. Which of the following statement best describe the primary objective of an investigation as opposed to an audit? To express an opinion whether financial statements show a true and fair view, to ensure compliance with all accounting standards, to establish a fact happening or assessing a specific situation, to verify arithmetic accuracy of the ledger.
C, sir, to establish fact.
Yes, C. Very good. Very good also, Sanjay. In the context of forensic accounting, what does the term forensic literally mean? Very good, Sanjay.
B, sir, suitably for use of a court of law.
Court of law, yes. According to the fraud diamond theory, okay, which fourth element is added to the traditional fraud triangle?
Capabilities.
Capability. Very good. During the due diligence review of letter of comforts given to the bank, these are often identified as a which of the following?
Hidden liabilities.
Very good. Hidden liabilities. So, this was your chapter number 17, okay, that we discussed. And what I want you guys to do, see, I think with this and the entire syllabus for the paper 3 has came to an end. Okay, I expect is that please go through the study material in detail. Read the study material. Number 2, practice as much as you can. And how do you practice is simply that take a question, write the answer, and then compare where you are going wrong in terms of writing. Just don't scan through the answer which is given. Write your own answers. That is a practice. That practice is required. Write your own answer and then compare where you are going wrong with the language, with the structure, with the sentence formation. Improve your writing skills along with, because most of the students, they know the concept, they know what is answer, but when they go for writing, they are not able to put those things in the paper, and that can be brought only with the practice. So practice is much required in this particular subject. Okay, things are logical. Do not, or don't try to mug up things. Understand the things logically, whatever it is, and then see how easily you will be able to remember the things. Okay, so practice, read, understand logically. These things will really help you to clear out in this particular subject very easily. Okay, so any doubts with any of the part of this particular subject? Any doubts? See, after going through the entire study material, you can go through the questions. Okay, yes, absolutely. You can go through the questions which are given in the end. You can go through the questions which are discussed in the class. Okay, you can go through the questions of the MTP, RTP, suggested answers, even the practice material which is uploaded. You can go through all these questions. Okay, do attempt as many as MTPs you can. Give as many mock test papers you can. Okay, and try to create, let's say for example, while giving the mock test paper, okay, give at the time when the exam will happen. Let's say afternoon time. Try to solve mock test paper at the afternoon time, and try to solve within 3 hours. Okay, practice the way you are giving the exam, so that in exam you will be familiar. Okay, this kind of environment that I have to complete the paper, and based on that, what will happen is that you will be familiar with the environment. You will not get nervous. Okay, in exam, what will happen is, then if you have a practice of giving mock test paper, that will really help you to keep you calm during the time of exam, and you will not get nervous. You will not get something, a panic situation that, okay, now I don't know what to do. That will really help you over there. Okay, so practice. Just a minute. Okay, any doubts? Any doubts? We have ma'am with us.
Ashokji, I'm not able to switch on my video. Ashokji?
Yeah, ma'am.
Hello, ma'am.
Hi. Thanks a lot. Yeah. So session is over now, huh? And we
Yes,
have completed our whole syllabus also. So good evening, dear students. Today was our last session for CA Final Paper 3 Advanced Auditing Assurance and Professional Ethics. And the chapter was remaining due diligence, investigation, and forensic accounting. And Harshad sir has very nicely explained you this chapter. And this is very important chapter and forming part of our section 3, right? So my request to all of you, now we are we have completed the whole syllabus. Now it's your turn. So before we start LVRC for May 26 examination, you need to complete the whole syllabus, right? You need to have in-depth knowledge of the concept so that in the paper you are able to understand the requirement of the question and accordingly you can answer. So what I expect from all of you that you are revising the concepts thoroughly rather than going for shortcuts now. And after revision, you are also doing writing practice, right? Those who are appearing in January, they can also do the same. Right now, we are on 24th December, and the paper is like we are having already like a 10 more than 10 days we are having, so we can have thorough revision and writing practice as well. And still, if you find any difficulty, though session is over, but we are always there to help you, guide you. You can reach out to us through Ask Your Query app. You are also having our number 01203045 You can definitely reach out to us because we also want you to be successful, and not only with 40 marks passing marks, we want you to secure exemption. And for that we need to put in lot of efforts. We need to have written practice, evaluation, analysis, that how we are writing in the examination, how we are going to write. For that we are doing mock test practice, as Harshad sir was telling you importance of mock test just now. So please practice that, and whatever difficulty you are finding, you can definitely reach out to us. And I hope you all will be doing wonderful in examination. So please revise, and those who are going to appear in May 26 examination, definitely we are going to start our LVRC live virtual revisionary classes. The difference is here in LVC, we understand the concept and thereafter we practice the question. But in LVRC, we practice the questions and through the questions we understand the concept. So we are going to commence LVRC. So for May 26, definitely you'll take that benefit. But for that also, I want you to practice the concept, the chapter, and it should be in-depth study, right? Not only upar ka knowledge. Because if we have studied in depth, then only we are able to understand the requirement of the question. Otherwise, all will look same only, right? So I really thank you, Harshad sir, technical team and BOS team, and each and every student who have participated in the class, and definitely who are watching online also. If I'm again telling you that if you find any difficulty, you can reach out to us, right? And we have shared you number. We have shared the Ask Your Query feature facility also. And you can also write on auditing-final@ICAI.in. You can write the mail on the same. Samyanathan, audit was once a fear, but your teaching, he is writing, teaching made it a strength. Every concept, illustration, and question was taught with patience and clarity. Thank you for shaping our mindset to think like professionals, not just exam writer. Yes, because definitely we need to have knowledge, and we are not working for just passing the examination. If we are having in-depth knowledge, then definitely we will pass. And apart from the same, when we will be going practically for audit or wherever we are going to serve, it will definitely help you because you will be having expert knowledge, right? So I once again, all the very best to all of you. Do wonders, have in-depth study, and Samyanathan is again right. Sir, your audit class did more than teach a subject. They build discipline, professional judgment, and exam confidence. Thank you for guiding us with such sincerity and responsibility. Right. So we are very thankful for your feedback. Thank you, Sanjay ji. Thank you for writing the feedback, because your feedback is very, very important. And we also share the link also. If you can share the feedback over there also, it will really be great for us, so that in the future also we can take care of those feedback and we can work on the same, right? We are also commencing practical insights, like those who are not having practical insights of audit. For that, we are coming out with a virtual series also. It will commence on 21st January. right? Wherein in 2 hour session, we will be sharing the practical knowledge, right? So, of course, that till that time, January exams will be over. And audit feels logical and confident now only because of you. Thank you, sir, ma'am, for your passion, clarity, and commitment towards CS students. Forever grateful. We are also grateful that you are sharing your frank feedback. And I always tell students that auditing is not theory, and do not compromise with this subject. It is also like of 100 marks, and don't be partial. Just like you practice for FR, AFM, or any other practical subject, if you are devoting time to auditing, you will definitely be getting more than 60 marks. But if you are compromising with this subject, students generally do, they give much time to other subject for auditing, they are having very less marks, and they compromise, right? They compromise, and they after they run for shortcuts. So it really defeat our purpose. So thank you very much, and please don't compromise with this subject, and study properly with planned manner so that you can get the success. I once again thank Harshad sir. Thank you very much. Thank you to all of you. Thanks a lot.
Thank you. Thank you, ma'am. Thank you, everyone.
Thank you,
Thank you,
sir.
everyone, for
Thank you, ma'am.
participating.
Thank you, dear students. Thank you, technical team, and thank you, BOS. Thanks a lot.
Thank you. Yes, sir.
Hanji.
Thank you.